Hello, I'm John Cogan, the CEO of Proformative, the leading platform for professional development across the Office of the CFO. I would like to welcome everyone to today's event entitled The Fundamentals of Sales Tax, Nexus, and Core Laws. I'd like to thank our sponsor, Avalara, whose commitment to thought leadership in this realm helps us make today's educational webinar possible and delivered at no cost to the participants. Sales tax compliance can be a nightmare for accounting and finance professionals. Just knowing some of the fundamental guidelines can help clear up what many businesses struggle with every month. Today, our expert speaker will take a comprehensive look at the primary rules around indirect taxation, such as Nexus creating activities and taxation of services, and highlight the areas that frequently put companies at risk. We have a number of learning objectives for today's event. Number one, identify the types of activities that can create Nexus in other states. Number two, identify the tax implications of how you ship your products. Number three, recognize new federal and state sales tax rules that determine whether your business is compliant or not. We have a few notes on today's event, so let's run through those quickly. These slides that will be presented today are already available for you via your GoToWebinar control panel. So if you take a look at your control panel, down towards the bottom, you'll see an area called Handouts. You might have to hit the plus next to that. And there you will see a PDF of the slides. And if you can't even find your control panel, look for the blue flower in your in the area where you can find all of your applications. So once again, in the handouts, those can be downloaded right now. You can follow along. Also, know that we will send you an email within the next 24 hours. That email will have links to, yes, the slides, and also to the recording we are making of this presentation. If you are interested in CPE credit, please answer all 3 polling questions and remain for the duration of the hour-long program. CPE credits are awarded within 24 hours, and you can find it under the My CPE zone on your Proformative profile. So top right corner of the page when you're logged into Proformative, and make sure you're logged in or you will not see your credits. If you have any questions at all, email us cpe@proformative.com. We would like to make this an interactive event. We have time set aside at the end for Q&A, and please do ask questions anytime. I will refer you again to your GoToWebinar control panel. There's a section there called Questions, simply enough. Type your questions at any time. They will queue up, and we'll do our best to get to them during the Q&A portion of the event. Your questions will be anonymized. No one will see who is asking that great question. And please know that we will present you with a short survey at the very end of the webinar. It takes about 30, 40 seconds to do it. We greatly appreciate the feedback, so thanks much in advance for sticking with us and giving us that feedback at the end of today's event. All right, one more thing before we get started. Quick welcome to Proformative. We are the leading professional development resource for every member of the Office of the CFO. We do over 200 webinars a year. Yes, you're on one of them right now. We have our massive online knowledge sharing community, over 10,000 discussions going on, which is great. Proformative Academy, which is over 250 on-demand courses. And that's just a great way to learn anytime, anywhere. So thanks so much for joining us today at Proformative, and we're looking forward to a great webinar. All right, well, without further ado, let's go ahead and get into the fun stuff, which is the learning. And to help us on our way, I'd like to introduce Shane Radigan, who is tax law and compliance expert at Avalara. Shane has been a business advisor on tax planning and succession issues for over a decade. He is responsible for managing compliance processes, reporting, and tracking trends in the sales compliance environment. Shane earned an LLM in taxation from University of Washington School of Law, his JD from Syracuse University College of Law, and holds a BS in Accounting and Business Administration from SUNY Plattsburgh. Shane, thanks so much for joining us again today. It's always a pleasure to have you.
Hey, John, thank you very much. Thank all you guys for attending today. Hopefully, I'll make it a worthwhile hour for you. I'd say on the spectrum of courses, this one is probably somewhere between basic, not quite very basic, and not quite intermediate. So we're going to talk about some general concepts. We're not going to dig deeply into any particular states' regimes, although we will have some time for Q&A at the end of the presentation, and hopefully we can field a few questions there. And if you have state-specific questions, I might be able to help out a bit. The point today is not to go terribly deep in any specific area or specific quirk, if you will, but to talk a little more generally about what it takes to perceive the sales tax regime that's out there, if you will, right? We've really got 46 different ones and a lot of little local ones as well, and hopefully help you out when you're thinking about planning, and when you're sitting down talking with your marketers and your product development folks, and they're making all these grand decisions about the future of your company. And for tax pros on this call, you typically you're the only one kind of sitting around the table able to speak to some of the potential implications around tax. And today, of course, we're talking about transaction taxes and sales taxes, to be specific. We'll run through some basic pieces here to kind of get you guys all understanding, why are we here, besides just earning CPE at the end of the year. Why is this topic germane? And we'll talk a little bit about the e-commerce revolution, if you will, or evolution. And that certainly is driving a lot of the discussions that business folks are having around sales tax compliance. As businesses of all sizes and of selling all sorts of objects find themselves with national or perhaps even a global exposure, and determining what the implications are of those sales and how to comply with rules that may or may not be applicable to those sales, it's critical. And as tax pros, you guys know that no one will actively come and seek out your counsel on this until there's a headache. And so hopefully we can arm you with at least some good questions to start asking some of the decision makers in your company about expansion and e-com and all these potential sales tax, potential developments that might touch on your sales tax compliance. Companies are always at a risk of audit. I mean, I guess that kind of goes without saying. We'll talk a little bit here just at the beginning, about how important sales tax revenues are to the individual states, particularly in a state like where I am. I'm in Washington. I'm in Seattle. We have no income tax, no personal or corporate income tax here in Washington, so you can only imagine, and probably without a lot of imagination, appreciate that sales tax revenues are really important to the revenue authorities down in Olympia. Not to say that in states that have an income tax, that sales tax revenues are any less. The broader point really is that this provides a great fraction of general fund revenue for a majority of states. And so they're always keen on it. We also touched on the changing economy, right? And there's this revolution of remote sales and e-commerce. There's also a big change in the economy, guys, around what people purchase, right? And how we spend our disposable income, or even how companies purchase, what companies are purchasing as they acquire assets. In other words, folks are not necessarily buying widgets across the counter at the hardware store with 80% of their paycheck anymore, like maybe they were 80 or 90 years ago when most of these sales tax laws were written. Or perhaps folks are purchasing items from remote locations, or even more importantly, they're spending a lot more of their money on intangible objects like services or even cloud-based software, which I happen to know a little bit about, right? Avalara's main product is the cloud-based software application. And frankly, a great deal of the states really haven't quite even figured out this new model yet. So time will tell, right? I think that those bullet points for manual sales tax management, those are probably all pretty intuitive to this crew. We performed roughly 14,000 rule changes in calendar year 2014. Appreciate, guys, there are over 11,000 separate jurisdictions in the U.S. that collect sales tax. Some of these are cities and counties, obviously the states, but some of them are transportation districts or improvement districts, stadium districts. So we've got a whole layer of special taxing jurisdictions kind of layered on top of the geographic breakdown that we already see out there. This stuff, again, is probably fairly intuitive, but I think it's important to kind of level set and make sure, we appreciate that what sales tax compliance may be costing us all. We're also going to mention what ignoring sales tax might be costing you naturally. The cost related to a bad audit assessment and penalties and interest and stuff. I don't have to tell probably anyone on this call. Can be pretty painful. Proactively trying to avoid those situations is always the way to go. When it comes to sales tax, listen, the results that you see here on this slide are very typical, and we'll even ask a few polling questions to tease out of you guys a little bit about how you feel about your own sales tax compliance. But suffice to say, roughly half of people that are surveyed say, we get around to it. Can't remember when we quite really did an overhaul of our sales tax compliance processes. Not really sure that an auditor wouldn't find a lot of mistakes. So if you're feeling that way a little bit, you're not alone. And hey, it's natural. It's that last bullet point on that former slide, guys. There's no way to make money with sales tax, right, guys? I mean, there's a lot of ways to lose money and end up in trouble. But as far as a function of your company, your typical entrepreneur, if he wakes up in the morning and he's worried about the top 100 items and things that he needs to do or she needs to do that day to make her business more profitable and more successful, sales tax might be number 101. It might be more like number 873, right, guys? It's just natural. So it's sometimes part of the battle we fight as tax professionals is trying to convince folks that, hey, listen, proactive will prevent us potentially some headaches. Here's a great little chart that actually a consulting group put together for us. So there is some actual statistical analysis behind this. There's some real numbers. It's startling, but I think it does. I think this really visualizes for us what it takes to run a sales tax department, if you will. Of course, there's a great deal of variability depending on how many jurisdictions you're obligated to collect in. We'll talk about how that works before we're done today. But I think this is a fair interpretation of the kind of hours that a functioning, up-to-date, marginally up-to-date sales tax compliance regime is going to cost your company or your client's companies, and it's startling, right? And you start piling on different jurisdictions with different rules, and it's not really so much of a linear increase in time. It's a little bit more exponential, right? Because the rules and the definitions and the forms that apply across many jurisdictions are not only unique to those jurisdictions, but often do rely on different definitions and oddball explanations of things. So you really got to become an expert in several jurisdictions as your company grows naturally, right? And we'll talk about, hey, when do I need to collect? So there's the kind of the introduction. John, would you mind popping up a polling question for us?
My pleasure. This is the first of 3 polling questions, folks, and simple enough. Are you aware of all the states in which you have Nexus, yes or no? We'd love to hear from everyone, whether you're here for CPE credit or not. It's always just interesting to see where folks are checking in and what perspective they're coming from. That also helps Shane make sure he's addressing the audience at large with his content. Note that this is all anonymized. No one will see what you're voting here, so you don't have to worry about that. I will leave each of our polling questions today open for 30 seconds to make sure we give everyone plenty of time to vote. And this has got to be one of the easiest polls I've ever seen. So that was easy. Let's go ahead and close it down and share out the results. And there we go. Shane, what do you think of that? Roughly 60-40 split.
Well, that's about typical. I'm encouraged actually that the 59% lies with the folks that think they got a pretty good handle on it. We're going to talk about this concept. I am pleased, honestly, guys. I mean, this idea of Nexus, so often gets confused with the taxability of items and is what I sell taxable. But Nexus is really the threshold question that all of us as tax pros have to ask. before we really get into the nitty-gritty of what we sell and what we don't. And Nexus refers to this idea, this connection, and thank you, John, for running that poll for us. Nexus refers to that connection that your company or your client's company has with a given state. And Nexus is a concept that comes up in not only in sales tax and not only in taxation, right, guys? This is a constitutional concept, and we're not all here for Con Law 101 today, but suffice to say that this idea of a legal connection, an activity on which a state or government agency can rely on and when obligating a taxpayer, in our case, or an individual, to comply with their laws. And it's really a fundamental fairness kind of question. And the idea is, guys, especially in the sales tax context, is at what point am I obligated as a business owner to conform and comply with the sales tax laws of a given state? Or in plain English, when do I have to collect? and in the sales tax sense, we look at it in sales tax nexus sense, guys. We look at what kind of connections and activities does your business engage in a given state. So let's talk about the state you exist in first, because that's kind of the easy one, but it also helps to lay the groundwork for understanding how Nexus works across the many states. So, for example, if I'm running a small e-com company out of my garage here in Edmonds, Washington, and it's not terribly successful. I haven't moved out of the garage yet, but I am selling widgets all over the country, and my widget sales are not too bad. I make the sales to some people within Washington, and I have to ask myself, am I obligated to collect? Now, I'm not talking about whether or not widgets are taxable, and we'll get to that, guys, but what I'm talking about, this first threshold question is, am I obligated to collect? Am I obligated to conform with the laws of Washington? I think intuitively, everyone probably understands that, darn right I am. I'm in Washington, right? I have a physical presence. We'll talk a little bit about this Quill case, but that it relies around this connection is actually a physical one, right? My business is located here. My bank account is here. I'm registered with the Washington Department of Licensing. I registered my business name. I registered as a business registrant, and I've got a business license here in Washington. Those factors, and the fact that I'm paying myself a little tiny bit of payroll here in Washington, means that I've got Nexus in Washington, and it's intuitive. But I wanted to make sure we understand exactly why, and that is why, guys, because the activities that my little company is engaged in here in Washington are of the nature that Washington can obligate me to comply with their sales tax rules. And in plain English, that means I got to charge tax. If my widgets are taxable in Washington, I must charge the accurate rate of tax on my sales in Washington and remit that money to the state. Okay, well, what about outside of Washington? And this is where it gets complicated, or it can get complicated, guys, and this is where it really takes some analysis and where the tax pro really has to step up to the plate. Nexus creating activities. Okay, outside of Washington, what kind of things do I engage in my little company that might cause me to be obligated to collect for other states? Well, a very common one is, do I have employees on the ground in any other states, including independent agents? Do I have even a sales force of like jobber sales agents, guys? You know, even a salesperson that sells 20 other companies' widgets on the road. But my widgets are part of their portfolio. I've got Nexus in those states where that person is operating. I am obligated to collect on my sales where that individual is working and living. We've got a short list here, but I also appreciate, guys, there's other types of activities which you need to think about, and that includes banking and financing activities. It includes co-ownership and affiliated entities. So if you've got some shared ownership with another company in another state, depending on the state, but very likely that state is going to assert that Nexus exists based on that affiliation, based on that other company. We've mentioned here trade show participation, and again, we're not running down a litany of state rules today, guys, but appreciate that if you're in a state for a trade show, you're in a state for a sales convention, depending on what types of activities that are occurring there, and in some states how long you are there, you may be setting yourself up for an obligation to collect. You may be triggering Nexus. If you've registered, even historically, even way back, registered a business name or a business license, you're given the state at least maybe not a guarantee that they can assert Nexus, but certainly something for them to hang that argument on, right? Something to hang their hat on. So these are the things that you as tax pros, you need to keep in mind, and these are the questions you need to ask as your company is making sales in more than one jurisdiction. What kind of activities do we engage in, or have we engaged in that location that may obligate us to collect, and that's what Nexus is all about, guys. One thing I will mention in particular here, because I think it's very interesting, and that is the Amazon laws, otherwise known as click-through laws. Actually, Amazon law is probably a broader, connotates a broader range of solutions that the states have come up with, and I chuckle because some of these solutions that the states have come up with are really quite ingenious. And what I mean by a solution, guys, is we mentioned in this slide here, Quill is this famous decision. In fact, it's the latest decision that the Supreme Court has given us on sales tax nexus. Quill describes a physical presence test, but Quill was decided in 1992, and the states have spent the last 23 years pushing and prying and tugging and stretching and developing really sometimes outrageous but sometimes pretty eloquent and unique legal theories on how to stretch this concept of physical presence to activities which otherwise may not be perceived as a physical presence when you're talking about a plain English kind of explanation. And one of these areas is this click-through nexus. And just in a nutshell, guys, if your company is doing advertising on a website, any website that's served outside of your state, in other words, the people running the website are not in your state, if you're doing some advertising on there, and the advertising is of a nature that provides you a referral fee, you have triggered Nexus in that state. Now, not every state has adopted these rules. New York State famously did a few years back, and that law has been, at the very least, the Supreme Court of the U.S. has decided not to hear it, and the courts all in New York blessed the law. So it is law for as long as we can probably perceive going forward. Since New York has had the success, this is not uncommon. Those of you who have been to the sales tax rodeo a few times will nod your head when I tell you, all of a sudden now that the law has passed muster in New York, very, very, very similar and sometimes blatantly cut and pasted versions of the New York law are appearing in other states' books. And we're up to 13 or 14 states now that have these click-through nexus laws. And I know today's presentation is not just about click-through nexus, but I want you to know what it was, first of all. But mostly I want you to kind of understand that states are really aggressive on this, right? They recognize that based on the Quill standard, they really are missing out on a lot of sales made by remote sellers, by sellers outside of their borders. And these Amazon click-through laws are just but one legal theory, one way that the states have, at least several of the states, have addressed this. Expanding the class of people who are required to collect. That's one way to raise your revenue. You can either raise rates, you can make things make more things taxable. Neither of those are very popular with voters. Or you can force businesses from outside your state who are not obligated to collect under current rules. You can come up with some really cool, interesting theories on why they ought to be collecting and increase your revenue that way. So if you think about it that way, it kind of completes the circle on this idea that the states are really hurting and broke, and finding themselves in that position, coming up with some pretty novel ideas on how to get more and more businesses obligated to collect. So what does that mean for you guys? Well, mostly what it means is, as tax pros, you need to be in a position of asking the right questions and talking to your company about making sure people are aware of the types of activities that can trigger this obligation and having a plan. You know, the message today isn't how do we evade sales taxes. The message today is be prepared for when you are obligated to collect in more places than you are now, and don't let it sneak up on you, right? So, you know, having an open line of communication with business decision makers and you know, folks that have maybe a little closer to the ground feel for the types of activities and things that are going on in your company. It's important to be aware of that as tax pros, because I guarantee you're the only one sitting on the table saying, hey, has anyone thought about sales taxes yet? So anyhow, that's the message. This is a great little slide. This pretty much says it right here. At least when we ask CPAs about their clients, CPAs say, yeah, roughly 70% of our clients are conducting sales online. Here we're assuming that those online sales aren't limited to the state in which the business exists. The internet pretty much has no borders. But sure enough, half of those vendors are only remitting, that means collecting sales tax in one state, their home state, we would presume. But those two numbers don't jibe, and it's only a matter of time. You know, as auditors become more savvy to the types of channels that businesses are using now to get goods into the stream of commerce within their state, that there's going to be more and more scrutiny on e-com providers. I think, you know, folks like Amazon here in South Lake Union and Seattle have drawn a lot of attention. Their strategy has been alternately aggressive and then alternately conciliatory, but they've brought some exposure to this issue, and I really think that the next wave is coming is the smaller fry, the folks that are coming right along, making lots of sales across the country that don't have a robust multi-state sales tax regime built in, and I really think the target's going to be on them in the next half decade or so. It's only natural. That's where the cash is, guys. And that slide there reveals to us that you know, not everybody is necessarily right up to speed. Here's some things you got to understand. So we talked about Nexus, and we talked about, hey, where am I obligated to collect? Well, you're obligated to collect everywhere you have Nexus. And that's a great circular statement, isn't it? But what that means is you're obligated to collect anywhere where you have the types of activities such that that obligation can be perceived by the state. If you've got people on the ground, you've got salespeople, you've got banking, you've got click-through, you know, advertising going on, all sorts of things, chances are you're going to be obligated to collect in those states. Okay, once you've decided where you are obligated to collect, you know, what happens then? Well, then this is where it gets complicated, right? Because we're really not talking about legalese and analysis of activities anymore. Now we're actually talking about, hey, how do the things that we sell, your company sells, how do they fit into the sales tax rules and regulations of a given company? A given state, excuse me, and there's really only one way to do that, and that's by, you know, complying with the state's laws by reading them and analyzing them and perceiving them. You know, most of these bullet points here, you guys are going to appreciate if you've been doing this at all. Rules and rates vary between states, right, guys? Whether or not, it's not even so much of whether a pink widget is taxable here in Washington, and is a pink widget taxable in Connecticut? Many cases it goes deeper than that, guys. The question really is, does the thing that Washington defines as a pink widget, is it similar in any way to the thing that Connecticut defines as a pink widget? And maybe I'm talking about the extreme case. But sure enough, there are some real differences, guys, in how the states define and perceive the very objects that their rules apply to. So a prepared food item in one state may be food for home consumption in the next state. You know, a software delivered via a software as a service contract may be perceived in one state as a rental agreement, Arizona. It may be perceived in the next state as a delivery of TPP, of tangible personal property, as hard to believe as that is. The point being is that your product people, your business development, your software developers, whatever business you're in, your engineers, they're going to perceive that object as exactly the same thing, whether it's sold in Connecticut or in Arizona. But for sales tax purposes, at least in my hypothetical here, they're perceived terribly differently. So different rules apply, and you need to be looking in different places to discover, what rate and what exemptions may apply. There's also, besides the variability from state to state, guys, a lot of variability from industry to industry. This is just a small list here of places where we find a lot of unique rules and quirks, if you will. I mentioned software. In many of these more high-tech areas, the real reason that we find a lot of variance between the states is because the states are really playing catch-up to the technology, right? The states are bureaucracies. Things move slow. That's how they're designed. It's not a knock on the states so much as it is just an offshoot of the deliberative nature of bureaucracy that many states simply have not caught up with technology, whether we're talking about software as a service or audio-visual streaming, or frankly this GoToMeeting that we're using today. These sorts of technologies are, you'll find that the state's approaches can be sort of scattershot, including a category of the state doesn't say anything at all. And the point, guys, today is, prepare yourself. It depends on what you're operating in, but if you're operating in one of these particular areas or even a handful of others, you're going to find a lot of granularity and a lot of quirky rules. Food, beverage, medical, those are the kind of things that policymakers love to tinker with, but it makes compliance in those areas, anytime there's tinkering, I probably don't have to tell you this either, that's where it gets complicated. So, keep in mind that the industry you're in is almost sometimes as important when gauging the complexity of your sales tax compliance requirements as is determining what states you're operating in. This is, relating to this idea that I mentioned earlier. I'd like to relate it to that anyways, guys, and that is we're all spending our money on such vastly different things than we did as American consumers even 20 or 30 years ago. And most of the rules that we're working with, frankly, guys, were passed after the Great Depression, not the one in 2007 or 2008, but the one in 1930. So most of the rules that the states are working with, the basic core rules, revolve around tangible personal property. We mentioned real property services here. It's not really even limited to real property services. Frankly, it's limited to all types of. It's not limited to real property services. We're really talking about all kinds of services. And this is that idea of, hey, we're spending more money on services now, right? Whether it's software as a service related, or getting our car washed and waxed, or paying someone to come to our house and put on a new roof. All these sorts of activities that, generations or two ago, there was no large market for. Well, shoot, now we're spending most of our money on services, according to some studies. And that, we threw in professional services in there too. Now, there's probably a few down here that if you're not providing professional services now, you may have at one time during your career, accounting and legal services, by and large, the states are avoiding taxation of them, probably because most lawmakers are lawyers. But a lot of the things that surround those services, guys, are now starting to be picked up by the states as taxable. When I say surround, I mean things like data processing, for those of you that are maybe helping people with payroll. How about software technical support for that CPA office that's got a QuickBooks Pro on staff, right? So the days of kind of determining that, well, I'm a consultant, I'm an engineer, I'm an accountant, I'm a lawyer, I don't have a sales tax problem, are pretty quickly fading away for two reasons. The nature of those delivered services are changing, but the big reason is the states are really becoming more and more aware of taxing services. Yeah, there's a hint. You probably already knew this one. Just like I talked about the differences with widgets, the states perceive the services very differently, right? We'll take a little look here at some of these differences, mostly to kind of keep it light today, not to drone you guys with too much of this heavy-duty stuff. But you can see here on this slide, guys, a Hershey's bar, a Hershey's chocolate bar, here in Washington, they changed the rules, but let's just say hypothetically, they're always changing the rules. For a while, anyways, that Hershey bar was subject to the Washington state sales tax, but the Hershey's cookies and cream bar was not. Can anyone guess why? Well, in Washington, at least for a while, the existence of flour on the ingredient list for the cookies and cream Hershey bar meant it was exempt. So, you know, it's not always intuitive, guys, right? So Washington says we tax candy, but not all candy. And the point here, guys, is not to drill into candy rules in Washington. The point is to make you appreciate that this can get real granular, and we could be talking about, maintenance services associated with the sale of a washer. We could be talking about the sale of computer software. We could be talking about sale of construction materials to a contractor. We could be talking about sales of medical devices to a physician's office. The point is that the states have their own way of looking at these transactions, at these objects, and you need to be aware of it going in, and you probably all kind of intuitively understand that, but it's a concern, and it can really snowball on you as someone who's responsible for sales tax compliance. Once the number of jurisdictions where you're required to remit as it grows, because there's a maintenance component involved with all this too, right, guys? I mean, once your company signs up to collect taxes in a given state, that's not a one-shot deal. That means you now have a maintenance component for that state forever. You always need to be looking at their rates, their rules. How does it affect your products in your company? And it doesn't go away. So, you know, if you're selling candy, if you're selling candy bars in Washington, you need to pay attention to DOR. You know, they make some changes here and there. Same thing with the labeled drinks. Believe it or not, in many states, a Rockstar energy drink, if it's got the little federal supplement label on it, is exempt as a dietary supplement. In many of those same states, Starbucks coffee is not. And I think you would ask anyone, even an amateur nutritionist, would say to you, well, neither one of them are probably very good for you, and we wonder what the policy is behind it. But that's how the rules work out, guys, so be aware. And finally, you know, in our section here on kind of content and how it varies, zip codes and understanding boundaries is critical. You know, once you determine where you have Nexus and once you determine how your products are taxed, the next thing is collecting the right tax. And zip codes were never designed with the idea of, obviously, of sales tax jurisdictions, but frankly, they're really never designed with local government boundaries whatsoever. Zip codes were designed to expedite the delivery of mail. And while they are a quick and easy, blunt tool to get pretty close, you will find over and over, and of course we're in the precision business here because we provide this service and get paid for it. So we like to be right. You know, dozens and dozens and hundreds of locations in the U.S. where a zip code only search will give you the incorrect rate, and occasionally it will give you the incorrect jurisdiction for filing purposes. So I mean, it can really be a headache. Yeah, here's a great example. Colorado is always a great example for complexity when it comes to sales tax, by the way. Perhaps the most complex and convoluted sales tax regime that we have in the U.S., and that's saying a lot. You see there, it's not a terribly great picture, but that is a rooftop picture, guys. Those are city streets, and the pink highlighted version there is grabbing one particular rate. Those houses that are not shaded in pink are grabbing another. This is probably due to some zoning laws, and then the sales tax jurisdictions are relying on those zoning laws to set their boundaries. I can't be certain, but it really does come down to a rooftop determination. And so depending on where you live here on the street in Greenwood, you might be paying anywhere from 6 to up to over 10% sales tax, just depending on your address. Hey, John, do you want to pop up our second polling question for us?
Let's do that. This is the second of 3 polling questions, as we did last time. We'll leave it after 30 seconds so everyone That's plenty of time to answer. We have a number of questions that are already queued up here, Shane, just to let you know. But I remind folks that you can ask questions at any time, and Lord knows this is an area that's rife with questions because there's so much variability, as Shane is pointing out here. Shane, every state wants to get theirs, right? And it's really difficult to get around that. So I think the expectation is to be changed, which is that your state is going to get theirs, and you have to figure out if you're going to get in trouble by missing whatever their signals are, and that, I think, is a tough challenge for most folks.
That's an excellent encapsulation, John. I'm glad you've been listening. Yeah, that's it in a nutshell right there, my man.
That is it. All right, so as we did last time, let's close it down now and share out the results. So the question is, how many hours per month do you spend on sales tax compliance? And, well, we've got quite a spread going over here, but a lot of people spending a lot of time. What do you think of this, Shane?
Yes, this is an interesting spread, John. The I don't know or not applicable up to a fifth, that's the most interesting to me, and I do see that. It relates, I think, to that idea that sales tax, either fortunately or unfortunately, depending on where you stand, it just doesn't necessarily get the emphasis on a day-to-day basis. You can't make money at it, right, guys? And for many, at least small, medium-sized businesses, that's the ultimate determination of what we all spend our time doing. And yeah, that's really something else.
Well, Shane, one other possibility, we do have a lot of large company folks, and we undoubtedly have folks here who aren't in the tax department of their company that are just trying to learn. So these folks, those folks in particular, might not actually be directly responsible. So when we ask them how many hours do you spend, it might legitimately be 0. So that's another perspective on why that might be as it is.
Yeah, I appreciate that, John. That's true. I know that your audience here, you always have, some of the most educated and best audiences of all these webinars I do, so that probably is part of it. It's still kind of fascinating, though, is that it's not necessarily something that gets the kind of exposure that a lot of our tax obligations get. So thank you for pointing that out. All right, guys, so we've talked a little bit about, hey, where am I obligated to collect? That's that Nexus question. And we talked some about, okay, now that I've determined where I'm obligated to collect or where I might be obligated to collect, what are the kinds of things I need to think about as I'm preparing to comply with a given state's or a given locality's rules? And that's, hey, what do you sell? How is it treated? What are the rules around it? What rates are applied? Let's talk now about exemptions. And when we're talking here, we're not necessarily talking about specific. Well, our first bullet point is talking about specific product-based exemptions, but really we kind of already covered that, right? That's determining, hey, are pink widgets taxable or exempt in Connecticut, right? Are maintenance services on computer hardware exempt in Arizona? Those are those kind of product-based questions about, hey, is this actual thing that I'm selling taxable or exempt? But there's also some other rules, guys, that we need to think about, and these generally surround what we call entity-based or use-based. And again, today is not about a litany of state-by-state rules, but let's appreciate that. Sure enough, the states have rules around, hey, who are you selling to? A hospital, a not-for-profit, a reseller, probably the most common exempted purchaser, someone who's going to sell your objects over again. Use-based also. Are they using it for a particular purpose? I was just working on a support case surrounding data centers. A lot of states have special rules, so a piece of hardware that if I sell it to Joe on the street is taxable. If I sell it to someone who's building a data center, for example, it may be exempt. So you have these exemptions that don't necessarily conform to a particular product or service, but actually deal with who's purchasing the product or service, or what use are they putting it to. Where and how to remit. It's probably intuitive to most of you tax pros on here, but it's really important to make sure that you're filing on the proper form, that you've registered accurately. Sales tax registrations can be a little tricky. States use different language sometimes to describe particular sellers' situations, and how you register can obviously affect your compliance down the line, and using the proper forms and the proper rates and the proper payment method. This is sales tax. Some of this stuff is still extremely local, guys. There are some local jurisdictions to this day that do not provide for any online filing. In fact, some jurisdictions may provide a PDF online. In some cases, it's not even a fillable PDF. They like paper checks. You're probably not surprised. Whereas the town right next door may have an electronic filing portal, with an HTML, browser-based payment, EFT. They may not accept paper checks, right? So keep in mind that sales tax is, in many cases, very local. Meaning local jurisdictions are administering their own, right, guys? Alabama, Louisiana, Colorado, Arizona, they all allow local jurisdictions to run their own sales tax regimes. We talked a little bit about sourcing. This is an important concept, you guys. For interstate sales that you're making across state lines, all the states are using and expecting you to use a destination-based sourcing model. That means you're looking at the rules that are in place at the location of the customer. It's an important element. It's actually something that is kind of intuitive, I think, until we start coming up with some complicated fact patterns, and then it can get a little complicated. And sometimes, frankly, it's a little more complicated than bill to or ship to. If we've got drop shippers involved, if we've got a fulfillment system, FBA type thing, it can get a little bit more complicated deciding where the actual destination is. But the point being, the broad point, guys, is that we are in a destination-based regime. Now, I will caveat that and mention, guys, in some states, for sales that stay within the state's borders, they're still using an origin system, which looks at your business's location. But for all interstate sales, we're destination. Quickly mention use tax, guys. This is the kind of the alter ego of sales tax. This is tax that you pay, your business pays on objects or items where no tax is remitted upon their purchase, but your business or company either consumes or receives the benefit of the goods or services, and you are obligated to remit use tax. You're the buyer in that case. Gosh, sales tax holidays, you can tell I'm ringing all these bells here at the end, you guys. Each and every one of these could probably be a webinar on their own. But important kind of high-end concepts for you guys to think about as you're thinking about what questions do I need to ask? If you're operating in states that have sales tax holidays, which is a good majority of them, really complicated rules. If you have products that are affected by these holidays, you must be on top of it. Taxability changes for a couple days a year. A jacket that may be taxable for 51 weeks a year all of a sudden becomes exempt. And you need to be on top of those rules. Believe me, your consumers definitely are, right? This is an area where you get probably as much pressure back from your buyers as ever when it comes to sales tax. So holidays, critical. Yeah, good luck trying to remember them all. Well, you really can't. You really need to determine what state you're operating in and determine if the objects you sell are subject to that holiday. And if they are, you can't rely on remembering it. It becomes a whole new maintenance item for your sales tax regime, and you got to start looking out for that stuff as they publicize and discuss what is and what isn't subject to the holiday. Hey, these are common mistakes, and you guys know all this stuff. I'm talking to a bunch of tax pros on this call. Yeah, failing to report sales. The only thing that's on here that'll get you in jail, collecting sales tax and not remitting it to the state. Definitely don't do that.
Thanks, Shane, for focusing on the most important element, too. I do appreciate that.
We don't want anybody getting felonies here. So there you go. Yeah, how to reduce audit risk. We'll do all the things I've told you, right? In the order I told you. No, I'm just kidding. Make sure, do a nexus analysis. Understand first where might you guys be obligated to collect. Then you need to dig into the detail. Are the things I sell taxable, and if so, what do I need to charge, and what rate and what form do I need to pop it on? Obviously, we love that last one, automate with technology. I think our service is wonderful, but I'm not here to talk about it today. And make sure, you know, like really that's the checklist, guys, of what we've been talking about today. And do it in order, so you're not spinning your wheels, right, guys? You find out where you need to collect. Then you concern yourself with, you know, is what I sell taxable? Now, listen, the thank you slide only means that we're done our slide presentation here. We've got some time for Q&A. John, can you moderate a couple questions for us before we get out of here?
Yeah, you betcha. Actually, the first one was on that last slide. You say, make sure you have calculations that are rooftop accurate. What does that mean?
Well, it relates to that slide that I did kind of rush through, guys, about geocoding and finding the actual rate that is due based on a rooftop or single address calc, and that's where, you know, it relates to that whole idea of zip codes kind of being a blunt instrument. It really, sales tax jurisdictions can really vary all within a single zip code, and that's what that term means, guys, is rooftop. Yep.
Great. Got a couple questions about contractors. So what if you have contractors in another state? Does that create Nexus?
Yeah, it sure does, John. If you've got 1099 contractors working in another state, I'm up here in Seattle, so it's kind of software mania up here. So where we see it a lot is independent software developers, right? Because a lot of those guys and gals, they prefer to work from home anyways, and they can work remotely as long as they have an internet connection, but it doesn't have to be a software developer, John. Anybody who's an independent contractor that you're paying who's in another state, without question, you've established a contact of a nature with that state that they can obligate you to start complying with their sales tax laws. So that one is, the bell is rung if you've got independent contractors.
Mm-hmm. Let's see, what about, speaking of Amazon, if you have a third party distributing all of your goods, so a lot of people sell things through Amazon, or Lord only knows, there have been, you know, distributors around for longer than there's been Amazon, but what if, so now are you subject to their Nexus? Or are they supposed to do all of the collection and remittance when they're selling your goods?
The second part of the question, the answer is no. It's not their obligation. And this is, John, this is based on my understanding of a generic FBA agreement, right? And fulfillment by Amazon, where the vendor is invoicing the customer. Amazon is simply providing the storage, the packaging, the shipping. Here's the trick. It's not where Amazon. Let's use Amazon as an example. It's not every place that Amazon has Nexus. It's every place that Amazon puts your stuff, because the location of stock is a Nexus triggering activity. And so it's a matter of where have they put my pallets of widgets so that they can fulfill my orders. And they're not terribly transparent when it comes to that. So a lot of folks that I've talked to have decided that once they've engaged in a fulfillment by Amazon, for example, or any fulfillment service, that they're going to concede Nexus in all the states where that stock may be located, because it really can be hard to determine it. The problem is it's not hard for an auditor on the ground in that state to walk in and see your stuff there. It's just hard for you sometimes as a remote vendor to know exactly where it is. But that's the touchstone, John. I digressed a little bit. The touchstone is, do you have stock? And if you've got stock there, you've got Nexus.
Interesting. Okay. Let's see. Let's talk about subsidiaries. Does a subsidiary Nexus, or it could be affiliate ownership in a global entity, etc., do they cause Nexus for you, for a parent company, for a partner company, etc., where there's some sort of ownership entanglement there?
That last part really is the slam dunk. If there's ownership entanglement, you're going to be in a situation in all the states where theoretically you've got contacts there. And I say theoretically in all the states, by rule in several of them. The point is that several of the states in the last 10 or 12 years have really beefed up there are regulations around affiliations. We're not talking affiliate advertising. We're using the same term to describe a couple things here. Yeah, but those connections that John was just talking about, subsidiary, shared ownership, parent, child, partner, the states are looking more and more closely at those relationships, because if there is shared ownership, or if there is a shared services like back office stuff, or if you're using the same billing department, something like that, the states will actively hang their hat on that peg in determining that you've got Nexus because of the relationship with that other business entity, even though from the outside it may not look like those two businesses have anything to do with one another. That combined ownership is a Nexus trigger for sure. And in several of the states in the last half decade or so, they've really beefed up their regs over that, which just signifies that they're really looking closely at it, John.
Okay, interesting times indeed. Speaking of interesting times, you've got a whole pile of questions here that we have no prayer of getting to. Shane, could we work with you after this and see if we can get some of these questions posted up on the site and have you take a swing at answering them so everyone can benefit from your knowledge?
Yeah, no problem, John. No problem at all. Just get them to me, and I'll get them back to you as soon as I can.
That's what we will do, and we appreciate it. This is just such an interesting area, and I say that sincerely. It's incredibly challenging, and I think people who are doing this manually, if you have any volume, I don't know. Yeah. Don't know why you would do that. You probably, there's going to be a world of hurt when you have your next sales tax audit. It's just incredibly complex. Well, Shane, we thank you so much for joining us today and giving us the benefit of your insight. Fantastic as always.
Thank you very much, John. I appreciate you giving me the opportunity to talk to everyone. And thanks to Avalara for letting me just talk about what's interesting to me. And thank you all very much for attending.
Great. Please do join us, folks, at Proformative.com to continue the conversation with your peers in our community. They're a great resource, of course, because they're living it day to day, and we'll also work with Shane to get some more answers to some more of those questions, and we'll get them out in the community there. Just too much ground to cover today. If you would like a direct introduction to Shane, or to Avalara, who is our sponsor today, please do let us know on the post-event survey. It's a click of a mouse, very easy. Also, of course, thanks to our sponsor, Avalara, whose commitment to thought leadership in this realm helped us make today's educational webinar possible and delivered at no cost to the participants. Of course, that's just what we do here at Proformative. Okay, we're going to get to our third and final polling question right now. Hopefully it doesn't hold on as tight as the last one did, which I had trouble getting off the screen. But here's the question. Do you currently use dedicated sales tax software to manage compliance? And we're not going to have time to display and discuss the result here because we want to get everyone out on time. But wow, we're looking at 2/3 no. And there's, I guess, 9% that don't know, 24% yes. And once again, it's just, boy, it's just a great pile of work and putting yourself professionally and your company at risk because no one knows this all. It takes a team of folks to stay on top of all of this stuff, a large team. So always an interesting challenge. All right, I'm going to go ahead and close this final one down now. Thanks, everyone, for voting. Thanks also for being with us today. At Proformative, we certainly hope to see you again at another Proformative event or online at Proformative.com. And at this point, I'm going to shut down the webinar. You'll all be taken straight to the post-event survey. Thanks for giving us a little quick feedback there, and I wish everyone a great week. Take care.